our market update, and we love giving you guys the market update because it actually tells you what's going on today. And Tim and I are out there seeing properties every day, day in, day out. We're answering questions from our clients. They're sending us text messages on the automatic crew investment alerts that they get. If you want to be on a crew investment alert, just simply send us an email. And we're always discussing different types of properties, Tim.
Yeah.
So what's in the news?
Well, before we dig into the numbers, the actual numbers of how the market's doing in this first part of 2023, we pulled a few headlines off of the internet here. And if you look at what's been going on from 2022 to 2023, we're getting some really solid projections about the real estate market moving forward into 2023. So this first headline, we had record real estate sales and price increases in 2022 in Calgary. Now, that's a really, really bold statement. It's true. But if you look at our market compared to the lower mainland in BC or Southern Ontario, our real estate prices are actually less than half of what theirs are. So while we had big sales and big sales gains, we're nowhere near the higher population density in Canada. The second headline there is the inventory hit a 10-year low at year end. That's the big thing that we're concerned about the most, is there's not enough listings on the market. And why is that not good for us?
Yeah, it's not good because if people were thinking of buying or downgrading or upgrading, and we are working with clients that are upgrading. One's moving out of a townhouse in Silver Springs and looking to move down south in the 500, 600, 700 range. And another one's upgrading in Mount Royal, selling for in the 1.6 range and buying in the $3 million range. And both clients have nothing to choose from. So this is where it's really, really concerning. So the guys that want to sell first, one guy who is upgrading to the big home, he needs to sell, Tim, and then buy. But the risky thing about that is that if he sells and he doesn't time it right, we don't give him enough time, there'll be nothing to buy. So that's really, really hurtful. And then the other thing that's going on in the market, and we always stress this, I think Tim and I are going to send out an email tomorrow regarding this, if anyone has a property to sell, and especially a property that we call not a problem property, Tim.
Or a property that in a normal market, if you're competing with many, many other similar properties, yours has an issue like an older roof or older windows. The customer will go towards the house with the newer windows, but right now there's no choice. So they will gravitate towards those properties and they'll have to upgrade them themselves.
Yeah, so the client that is selling the $1.6 million house in Mount Royal, it's an old character home. And you know what, old character homes, they don't appeal to everybody. I mean, this thing was built in the 1930s, Tim, with additions to it, right? So it doesn't appeal to everybody, but because there's no inventory, people may jump on it and it may start a bidding war. So the other property that we were looking at, which is really interesting, last week we had one of our great investors. He's bought many properties through us through joint ventures by himself. Anyway, he was looking at a property in Evergreen backing onto Stony Trail. And when we went out in the backyard, it was loud. Like I'm telling you, it was really loud back there. We were on the corner where people come around 22X onto Stony. Now it's all 20. Now it's all Stony, but that's where they zip around there, and you could hear that noise. Now this property was beautiful, but we had to cut it off at $650,000 for our clients. It came on the market for $630,000. We cut it off at $650,000. Well, we're like, we know it's beautiful, but you can't pay any more than this. And it actually, I think, sold for $675,000 with very few conditions, like maybe 4 days of conditions or something. Actually, no conditions. They had no condition, and they were waiting on the deposit check.
14 offers.
Yeah, 14 offers on a property that was backing on to the loudest road in Calgary.
Whereas in a normal market, if there were 10 homes, the exact same size with the exact same finishings, the ones inside the community would be more desirable, and you wouldn't have all of that action on the one on the outside of the community.
Yeah, and just finishing up on the market update, inventory hasn't gone over 2,000 listings, so we're still under. Tim was hoping that they would come on and then less properties would stay on, or more properties would, and it hasn't happened. So we're still not over that 2,000 mark. So we're going to be in this for some time. It doesn't look like it's going to.
And these last two headlines that we've got here relate to that. The labor market is the hottest in years. Says Alberta's well positioned to avoid the recession that they're anticipating is going to hit the rest of Canada. We're getting tons and tons of people moving here from other provinces and from out of the country, and they're coming here for the jobs.
Yeah.
So our labor market is booming. That means more people are moving here. They have to live here, so they want to buy houses and they want to rent houses. The final thing is the Calgary Real Estate Board is anticipating the market to stabilize. So we think we're going to go back into a more balanced market, but not until the end of the year. So this turmoil that we're seeing, the multiple offer situation, the not enough inventory on, we're going to see that for the next few months. So moving on, we'll dig into the numbers quickly here. Just got to move something here. If you look at the number of sales, now this is just the first 3 weeks of January. We're at the 22nd or 21st now. So it's just 3 weeks, but compared to January 2022, the total sales volume is down almost 40%.
Yeah.
New listings are down 16% and active listings are down 4% over 2022. Now, January is generally, it starts out as very, very low amount of listings because everybody's coming out of the holidays, but we're still below, the trend that's been going on for the last 10 years. Average price, again, that's down just a little bit, 2.5%. We're anticipating that to be up by the end of the year.
By the end of the month, Tim.
Yeah.
Because it's all going into multiple offers. And just to explain to everybody there, active listings, it says 2565. That's taking into, CREB always takes into consideration the pending listings. So out of that, there is, I can tell you right now, there is 580 pending listings. So there's just under 2,000. And out of those 2,000 listings, about 800 of them are condos. Okay, so the places on the west side, I calculated the other day, Tim, on the west side, I think there was 8 listings that are over $1 million.
Yeah, and to put this into perspective, we were sent a house in Sundance. It's a community down south by one of our clients, and she wanted to look at it. So we decided, well, we'll look around and see if it's priced right, if it's worth taking a run at. That was the only single family home on the market in Sundance. And Sundance is a very, very large community. So we're seeing, in those desirable communities, very few listings and lots of competition when a listing does come on. Now, on the flip side of that, if you own rental properties, that means demand for rentals is up as well, and rental amounts are up as well.
Yeah, and we're hoping that from now to the end of March, roughly 3,000 listings come on. We're just hoping that some stick around so we have some choice.
Yeah, so we will move on to Danielle DeMarco's market report. Danielle's our go-to mortgage person. She actually develops a real estate investment plan when she does a mortgage with our clients. She doesn't just get you a mortgage and then move on to the next one and send you a Christmas card. She does thank Christmas cards, by the way. We don't. That's one of our failings. But we'll bring Danielle on and let me just get it set up here. And Danielle, you can maybe fill everybody in on the mortgage market right now.
Yeah, for sure. So to start off with, quick market update. Obviously, we are coming up to the Bank of Canada rate announcement. We are expecting the variable overnight lending rate, and therefore variable rate, to increase this week. Likely a 1/4 point to 0.5% increase. Now, for those of you that might panic, don't panic. That only affects variable rates, and we are still going to see rates come down next year, is still the forecast. So kind of a ride it out mentality until next year. For those of you looking at fixed rates, the good news is that fixed rates have steadily been coming down the last month and a half here. We are seeing some phenomenally low interest rates right now. It's a great time to be asking for best rates from lenders and exceptions from lenders, because the market has been slower in Calgary just because of due to lack of supply. Lenders are hungry for mortgages right now, so they're making more exceptions, they're offering lower interest rates, things like that. So now is actually a great time, if you can find a property, to be purchasing a property. But as far as real estate market as mortgages go, definitely we're going to start to see fixed rates slowly increase soon, because we're seeing bond yields increase, and fixed rates are based off of bond yields. The variable rate, like I said, we are going to see that increase as well, but that's based off of that Bank of Canada overnight lending rate that we're going to find out about tomorrow. So overall, great time to be buying. I've preached this 1,000 different times, but if you're trying to time the market as a real estate investor, please don't. You will never come out ahead. The best thing you can do is get in. We can always redo mortgages down the road if rates come down, but at least that way you're building equity. You have a tenant paying your mortgage. You know, you're building your real estate portfolio. On to something different. I wanted to kind of chat today. So for those of you who are looking at getting a mortgage, I wanted to kind of touch base on the top 5 things to do when you're starting out with a mortgage broker. And they may sound basic, but they're actually quite critical. So in times like this, where you hear Tim and Azad talking about, you know, multiple listings and lack of supply, well, guess what? That means you as a buyer are potentially going in competition against other buyers to purchase that specific home that you want. So that means obviously more competition. You need to have better terms and conditions in your offer. And a way to have better conditions is to have the shortest financing date possible so that the seller knows that you have a strong financing condition and that you have been properly pre-approved. And so a shorter condition date will oftentimes strengthen your offer over someone else's. But in order to have that shorter condition date, you need to be ready to act quickly. And in order to be ready to act quickly, you need to be ready for your mortgage broker. So first things first, you need to complete a full application. So I preach this all the time. Picking up the phone, calling, asking some questions is great. Finding out, okay, how much can I spend is great. But if you're not filling in every single detail, then we won't be ready to submit an application on the fly if you write a last minute offer or a competitive offer with a short condition date. Also, you know, you don't want to be writing offers on properties that you can't afford or whose properties guidelines don't meet the guidelines of what you're pre-approved for. So simple things like if you're buying a second home, did you know that a second home can only have 1 unit? It cannot have a legal suite and it cannot have an illegal suite. So things like that, where your mortgage broker is going to take your application and fully lay out a plan of what type of property can you purchase, what purchase point can you be at, and what down payment you need, among other things. So taking that full application is going to be really, really critical to setting it up properly. Second thing is gathering those documents that your broker is requesting. Trust me, I don't love paperwork, so I'm not asking you for things that I just want to see for no reason. Anything that we're asking for is because it's critical to the mortgage application. And the more documents you can send your broker up front, the more accurate your pre-approval is going to be, and the faster we get an approval back from the lender with documents reviewed. Again, allows you to waive conditions earlier, or it allows you to put in a shorter condition date to strengthen your offer. Part of that is income. A lot of people don't actually know what they make for income. And if you underestimate your income, you could be selling yourself short on how much you can spend or how many properties you can purchase. You might make a salary, but your 2-year average might be way higher, taking into consideration bonus and overtime and things like that. Or you might make a salary and you might have rental income on the side. You might have child tax benefit, all these different things that we can use, but in different ways and different advantageous ways, depending on the lender. So knowing the breakdown of exact income and how you're claiming your income is going to allow us as a mortgage broker to really hone in on what income can we use and really max out your income to let you purchase the most amount of properties possible. Third thing, formal pre-approval with a rate hold. I've been talking about this probably the last 12 months now, since we've started to see rates really increase and jump this last year, is that a rate hold doesn't just lock in a rate for you. That's an added bonus. What the rate hold does, it's actually locking in the stress test qualifying rate. And when we're in a rising rate environment, every time that rate goes up, that stress test qualifying rate goes up. As that stress test qualifying rate goes up, the amount that you can spend goes down. So by doing a pre-approval with a rate hold, you are not just locking in a rate, you're actually protecting your purchase price. Because we saw this in October, I believe it was October, when the Bank of Canada came out with the 1 overnight lending rate, and immediately from the day before to the next day, qualifying went down by $40,000 overnight. So if you didn't have a rate hold the day before and you went the next day to get one, you could spend $40,000 less. So same thing, I'm always encouraging rate holds with your pre-approvals, not just a pre-approval if you qualify for a rate hold, obviously, but that will help protect your purchase price. And a lot of people don't realize that. Fourth thing is have your credit checked. Here's another big one. In order to do a pre-approval, in order to do a rate hold and protect that stress test qualifying rate, you have to do a credit check. And for those of you that stress out or worry about a credit check, don't. A pull from the same type of institution within 45 days of each other still only counts as one pull. So Equifax updated that about 1.5 years ago to help people who were searching for credit and shopping around so that you're not feeling as stressed about having your credit pulled. Now, having said that, the other reason we like to do a credit check is because Equifax and TransUnion make mistakes, just like everybody else. Sometimes we're seeing things on credit bureaus that maybe shouldn't be there or are incorrect. And you might need time to correct or fix those things before you can write an offer. So having that done up front, again, allows you to be ready to go for when you actually write an offer on a home. And the last thing is follow your mortgage broker's suggestions. So I personally have been a mortgage broker for over 16 years now. And I can see the different rate cycles coming. I can see the different housing cycles. I can let you know if I think you should be locking in, when you should be doing a rate hold, should we be doing fixed, should we be doing variable, what are the strategies we're looking at for a specific property and why, which lenders are we going to and why? Why are we saving some lenders for maybe property 3, 4, or 5, and we don't want to use them on property 1 because it could affect your entire investment plan and cause you to purchase less properties than you could have had we used the right lender in the right order. So there is a vast amount of knowledge in my head that I can use to help assist and come up with an investment plan to help you accumulate multiple properties. But again, my biggest piece of advice is use that asset, lean on your mortgage broker, trust their advice, and listen. Really, the advice that we're giving you is to help you with that investment plan to accumulate properties and build your wealth. So the advice that we're giving you is going to be professional, sound advice. So that is what I have for today. Some top 5 tips to deal with your mortgage broker and a little market update. So Azad and Tim, if you wanted to pop back on, I'm not sure if anybody has any questions, but I will put my contact information in the chat if anybody wants to reach out.
Thank you. Thanks, Danielle. That was really, really informative. I like it when Danielle comes on because there's a lot of stuff that even Azad and myself have no idea about. And it's good to get an update every couple of weeks because the mortgage market does shift from week to week. Rates are changing all the time, or we may get another rate increase from the Bank of Canada shortly. And it's really, really good to get that advice from Danielle.
Yeah, and Danielle has been working with us for close to 20 years. She looks after all of our clients. And she does an awesome job. And the reason why we use her is because she doesn't just get you a mortgage, she creates a plan for you to grow and succeed at real estate investing.